In this video, I'll be reviewing Tesla's Q4 and full year 2021 financial results, and spoiler alert, massive. So let's get into it. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment theme merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. So let's get into it, and just for the record, I will also, in addition to this video, be posting some highlights and my reaction to Tesla's Q4 earnings call with comments from Elon, Zach, and the team, but in this video, we're just focusing on the earnings report itself. Let's review some of the key highlights. Operating cash flow, less capital expenditure of $2.8 billion just in Q4. In total, a $1.5 billion increase in cash and cash equivalents to $17.6 billion, almost $20 billion of cash that Tesla hasn't been able to spend. Remember, Tesla already spending money as fast as they possibly can, yet just this quarter alone, they added another $1.5 billion to the bank. This cash pile is going to become an increasingly larger problem for Tesla in the future. Profitability, $2.6 billion of GAAP operating income with a 14.7% operating margin, 30.6% GAAP automotive gross margin, including regulatory credits, and without the credits, 29.2%. Record deliveries of a little under 1 million units in 2021, and annualized vehicle production run rate of over 1.22 million in Q4 2021. In case you're a little daft, that means Fremont plus Shanghai alone combined already at an annualized rate of 1.22 million. Doesn't include any production from Austin or Berlin. Quote, 2022 was a breakthrough year for Tesla. There should no longer be doubt about the viability and profitability of electric vehicles. We achieved the highest quarterly operating margin among all volume OEMs based on the latest available data, demonstrating that EVs can be more profitable than combustion engine vehicles. Many folks have seen this one coming from a mile, aka a decade away, but many legacy automotive manufacturers at this point in time, if they haven't already figured it out, should currently be shitting their pants. We aim to increase our production as quickly as we can, and I just want to underscore this one more time. Words matter. We aim to increase our production as quickly as we can, not only through ramping production at new factories in Austin and Berlin, but also by maximizing output from established factories in Fremont and Shanghai. And just for the record, I want to point out, this is obvious, this is evident. Over the long term, I have the Shanghai factory alone ramping to over 1.5 million units before the end of this decade. I also have Fremont ramping to around 1 million units also at the same point in time. And again, just a reminder, these numbers are available exclusively in my Tesla valuation model over on Patreon at the investor support level and above. This includes my production assumptions in my base case, which I'm just showing, my bear case, and the bull case if everything goes right, all the way out to 2031. This also produces my Tesla price target, so if you're not already signed up and you want access to these, hit the card in the corner or the link in the pinned comment to join Patreon. Put differently, I have Tesla producing in excess of 2 million vehicles before the end of this decade just at the Fremont and Shanghai factory by eking out incremental increases in capacity. A lot of folks don't seem to be doing the math here. Tesla's existing facilities will continue to increase capacity over time. There'll be some expansions, but even without expanding the actual footprint of the factory, the buildings, etc., if Tesla can delete parts, processes, robots, and steps in the manufacturing system, it means they'll produce more vehicles from the same factory footprint. While 2021 was a defining year for our company, we believe we are just at the very early stages of our journey. Couldn't have said it better myself. Just some real quick highlights from the financial summary here. Automotive revenues up 71% year over year. The only thing growing faster than Tesla at this size, something that's already so massive, is your mother. Total revenues up 65% year over year. Operating margin close to 15%. This is insane, and the trend continues to go higher. A couple of very important pieces of context from Tesla's earnings as well. I was expecting margins to be a little bit higher, profitability a little bit higher, and the reason here, a massive surprise, $330 million, a third of $1 billion in payroll tax based on Tesla's 2012 CEO award option exercise, aka Elon selling stock. Tesla had to pay $1/3 billion as a result. I didn't see this one coming. I'm not a finance genius, so maybe this was obvious, but a little bit of a surprise. In addition to that, Tesla also, had a stock-based compensation expense of $245 million because we're now likely to see those final 2 tranches be realized. In other words, in this quarter alone, almost $600 billion of one-off expenses. These put a massive drag on financials. Back them out. Do the numbers, you realize Tesla absolutely slaying it. It's also worth noting that Tesla faced major headwinds in 2021 in terms of profitability, including rising raw material, commodity, logistics, and expedite costs. Tesla is not immune to the uphill battle all automakers are currently facing with supply chain, logistics, etc., yet still trending in the right direction. Total vehicle production up 83% year over year. This is a staggering number. Builds of Model Y started in late 2021 at Gigafactory, Texas. Fremont factory achieved record production in 2021. We believe there is potential to extend overall capacity beyond 600,000 per year. And by the way, this for the record is in the short term in my opinion. Long term, Fremont's probably going to get to around 1 million or so. Remember, Fremont is a factory that Tesla bought for pennies, in fact a penny on the dollar. This wasn't a clean slate design, it's very inefficient, yet still Tesla continues to increase capacity there. As usual, Tesla has a breakdown of current factory capacity and future factories and products. A couple of things to note here. One, future product, aka the $25,000 Tesla, still here but not described by name. Unless of course they're talking about a transit van. I think that's after the 25K vehicle. We can see Model S and X capacity in California around 100,000, Model 3 and Y around 500,000, but curiously, Shanghai unchanged at greater than 450,000, which has been the case now for a few quarters. In case you don't know, the annualized rate of production at Shanghai in December 2021 was well in excess of 750,000 vehicles a year. Talk about sandbagging. By the end of 2022, the current capacity at Shanghai, and remember capacity does not equal production, there's downtime, etc. But Shanghai will be well in excess of 1 million units of capacity per year by the end of this year. I wonder if Tesla's going to update this or still leave it at greater than 450K. Very important to note the trend here of Tesla's market share. This is trailing 12-month data, so it smooths things out a little bit. You can see the market share in the US and Canada, Europe and China all following the same exponential curve. For those of you playing along at home, this is what we call a trend, and if you continue to follow this trend into the future, which direction is Tesla's market share heading in each of these major regions? And if you can't figure that out, maybe talk to Mark Toilet Boy Spiegel or Gordon the Class Clown Johnson, who'll be able to set you straight. Probably the most stunning piece of information in the entire report, quote, "We successfully increased the number of FSD beta vehicles from a couple of thousand in Q3 to nearly 60,000 vehicles in the US today." This is insane. I had no idea how widely this FSD beta software had been deployed. This is bananas. Remember, the data flywheel. The more data, the more this software can improve. The fact that this has rolled out to over 60,000 vehicles is just mind-blowing to me. Another way to think about this is that full self-driving beta has now rolled out to about 2.5% of Tesla's global vehicle fleet. I know they're just referring to the US, but I'm accounting for all vehicles they've ever produced. Why does that number sound familiar? Oh, it's about the same as Tesla's share of the US and Canada new vehicle market. The implications of this really are stunning. Of course, people are going to ignore it. They're not going to realize how soon this means FSD will be solved. They're going to ignore the potential software implications. They're going to ignore everything because nobody believes that full self-driving is ever going to happen. But the fact that there are now 60,000 vehicles training the latest version of this software, the data floodgates have truly opened. It's only a matter of time, folks. Don't say I didn't warn you. And an interesting tidbit here, Tesla's cost of goods sold per vehicle dropped to around $36,000 in both Q3 and Q4 2021. In other words, it cost Tesla about $36,000 to produce a vehicle that they're selling for, on average, about $50,000. And the cost to produce vehicles is still collapsing over time. And some fun data over on the side here. Vehicle delivery growth over the trailing 12 months, Tesla versus other automotive manufacturers. We can see huge growth as Model 3 began production, a little bit of a slowdown as Shanghai was ramping up, still growing at close to 50%, and now a massive uptick again, close to 100% growth. Meanwhile, the rest of the automotive industry flat, declining, slight rebound, and declining again. Bodes well for Tesla, doesn't bode well for every other name on this chart. And lastly, GAAP operating margin over the trailing 12 months. Notice in red, Tesla, bucking the trend. -2 up to over 12%. Meanwhile, GM, Toyota, BMW, Honda, Volkswagen, Daimler, Hyundai, Ford, Nissan, aka most of the companies that will be bankrupt before the end of this decade, languishing around that 0 to 10% range. Again, cast your mind forward. Look at the trend here. Run that trend out into the future. Soon, Tesla's at 15, 18, 20+% operating margin over the trailing 12 months. Tesla's literally going to be here in about 12 months' time. Even Tesla's energy business booming despite the fact that Tesla have prioritized automotive. Quote, energy storage deployments increased 32% year over year, mainly driven by strong megapack deployments, aka these are being used by utilities, etc. As demand remains substantially above capacity, growth has been limited by supply. And as expected, Tesla reiterating the same stuff in terms of volume. Over a multi-year horizon, we expect to achieve 50% average annual growth in vehicle deliveries. Our own factories have been running below capacity for several quarters as supply chain became the main limiting factor, which is likely to continue through 2022. In terms of cash, we have sufficient liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. AKA, Tesla is not going to need to go to the market and raise more capital. Printing so much money, they can fund their own growth and expansion. Now some photos. Fremont factory, record production in 2021. Congrats to the entire Tesla team, especially at Fremont. External shot of Gigafactory Berlin. Giga Berlin quality control, and am I the only one that feels like they're tripping balls at the moment? Gigafactory Texas, from which deliveries to the first customers are expected this quarter. For the record, I visited this factory. It's fucking gigantic. In fact, I think there's only one thing on planet Earth larger than this factory, and that is fill in the blank. In this shot, we can see seats being attached to a structural battery pack, aka the pack featuring the 4680 cells. This is a good sign of progress. And a super interesting tidbit, Tesla's cumulative profitability since inception. Basically, how much money has Tesla, quote, lost, aka invested, and how much money have they actually made, retained earnings. Tesla has now reached the crossover point where throughout the lifetime of the company, with these mounting losses in red over time, finally being completely overcome by Tesla's now stunning profits. And just for the record, the narrative here, Tesla's retained earnings, this was when the Tesla Q dum-dums were saying, Tesla can't make money. Tesla's going to go bankrupt. The more vehicles Tesla makes, the more money they lose. I don't get that people didn't get this, but this is the way things will typically look for any growth company, investing heavily in the early days, then eventually becoming enormously profitable. Here's some key quarterly metrics over the last few years. We've got vehicle deliveries trending up, operating cash flow and free cash flow also trending up, net income and adjusted EBITDA also trending in the right direction. But I really like to look at these in terms of the trailing 12-month data. It just smooths out some of the lumpiness and the seasonality. Vehicle deliveries in millions of units. This is a beautiful S-curve. I mean, really, we're seeing exponential growth here. Operating cash flow and free cash flow, the same thing. Heading to the moon. Net income and adjusted EBITDA, again, beautiful S-curve increase. It's just a thing of beauty. In short, Tesla absolutely slayed it. There'll be a little bit of noise around these one-off expenses, the huge payroll tax, $1/3 billion, plus the last expenses associated with the 2018 CEO compensation plan. This is the single best quarter in Tesla's history as a company, and we are just getting started. 2 new enormous factories ramping this year. Delivery is expected to commence in Q1 from Austin, probably in Q2 from Berlin. These may have a temporary impact on margins, but throughout the rest of this year, Tesla is going to be printing so much money, it's absurd. Wall Street is massively underestimating this company, their profitability, and more importantly, their delivery growth. Don't say I didn't warn you. Remember, more videos coming on Tesla earnings, including earnings highlights plus a reaction, so stay tuned for those. And I'll see you guys in the next video. And don't forget, if you'd like to support the channel, sign up to Patreon with the card in the corner or the link in the pinned comment. You'll get access to my Tesla price targets at all levels. If you want to go a step further, you can access my Tesla valuation model at the investor support level and above. I'm Stephen Mark Ryan. This is Solving the Money Problem, and I love you all. Hey guys, thanks for watching. If you enjoy these videos, there's a bunch of ways you can support the channel, access exclusive content and perks, and get some free stocks and crypto. Check out the links in the pinned comment below. You can get 2 free stocks with WeBull, a free stock with Stake, free Bitcoin with Coinbase, and free Bitcoin with BlockFi, and the BlockFi Bitcoin Rewards credit card. You can also pick up some Tesla, Elon, and investment themed merch in the merch store. If you want to take it to the next level, join thousands of members on Patreon to gain exclusive access to over 100 Q&A videos, loads of exclusive content, exclusive access to my up-to-date 10-year Tesla stock price targets, and even access my Tesla valuation model at the investor support level and above. So check out the links in the pinned comment below, and thanks for your support. And if you're still watching, you're awesome. I read every single comment on this channel and I really appreciate your feedback. So if you've got any thoughts on today's video, questions, comments, or suggestions for a new video, let me know in the comments below. Check the cards on screen now to browse the merch store, join Patreon, or watch the next video.